Happy Friday, Market Wizards. It's 8:37 a.m. Eastern Time on the 8th of September 2017. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, I'm having to pre-record this. I have an appointment to attend to at 9 Eastern, so I figured I'd get this out rather than skipping it. The overall market stance this morning is for risk aversion. The allocation is to safety this morning. The Japanese yen leading the pack up almost 1%, 89 pips, followed by the euro. The euro's up another 45 pips, and then gold is at $1,355 basically. The laggard today is the Dow. It looks like the Dow and the US dollar. The US dollar has taken a beating this year. It is down almost 11% for 2017. Also, the 10-year yield is at its lowest level since since the election last November. Trade is sitting at 2.05%. So there's definitely some risk aversion here. Money's being allocated to the treasuries, gold, and currencies. The dollar's being sold, and that is a sign that the market's moving to safety for whatever reasons. So the S&P minis are still trading near highs. We're only about 20 points from the highs, and holding. The market's has been in a balanced structure since the rally from Tuesday to Friday of last week. This whole week we've spent pretty much sideways on this North Korean kind of cloud looming, and the debt ceiling and many other uncertainties that we see in the markets. So there's not much more in terms of news that to cover here this morning. There are a few European releases, but nothing of great significance. As far as what we're expecting for today, we're at 10 o'clock. We're getting U.S. wholesale inventories for July, expecting 0.4%. That's at 10 a.m. Eastern, and then at 3 p.m. Eastern, we're getting July's consumer credit, expecting 15.0. Today, tons of speakers. It started last night. At 7 p.m., we had Fed Speaker Dudley releasing some remarks. Fed Speaker George at 8:15 last night. At 4 a.m. Eastern this morning, we got ECB's Speaker Lycanen. At 7 a.m. Eastern, we had ECB Speaker Remcevics, I guess. And then at 8:45 here in about 4 minutes, we get Fed Speaker Harker, and then at 10 a.m. we get Fed Speaker Dudley again on CNBC. So it's a parade of central bankers talking up or down. They're currently mostly down, and that's all we've got other than wholesale inventories and consumer credit. Now to look at what we had yesterday. The expectation for yesterday was for a mostly balanced trade. I did expect the market to rotate down a little bit, get tangled up in the 24.62.63 area, the MC point of control, this black line you see here, and then take a pop and then go sideways. I expected a very small range. I talked about a 6 to 7 point range for those who were here for the trader bite. And basically that's what we got. The market ended up dipping a little bit lower than I expected, but mostly we had Hypo 1. Hypo 2 is looking for a push, a continuation and a push right off the get-go, and then for the market to continue higher. Remember, we are in this large high volume node here. High volume nodes stand for acceptance. They show us that there's a lot of volume in a small range of prices. And so we expect it to get tangled up a little bit. And I did outline the fact that we are likely to trade in between these low volume nodes on the composite. We are essentially stuck right here, and that is correct. we spent most of yesterday right in there. So the low yesterday was actually right up against the MC low volume node as expected. Here's what we actually had yesterday. This is what we got. A clean, clear opening swing. The market pushed higher, pushed down, made an attempt at the high, failed, and then sellers stepped right back in into the point of control. Continuation, trade, continuation, which turned into an impulse 7.75 points from top to bottom. That's basically the whole day's range. And then we balanced, and then we made another attempt. Every attempt by the buyers has been refuted. A 7-point rotation up that was taken all the way back. The market tended to balance on the lower side. So the profile showing that it's just completely imbalanced. We were trading inside of the prior day. We had a completely inside day yesterday. The low was inside the prior day's low, and the high is inside of the prior day's high, with a fairly bulky profile. Look at how boxy this profile is. It's there's a consensus on a very distinct set of prices, a very distinct set of prices, and they traded them all equally. So it's a pretty odd trade in my opinion. So this is the big picture right here. As you can see here, we've got the market cutoff right there at the low volume node, and then from the top, this is the cutoff right there. Oops, that's a really bad straight line, but you could see what I'm talking about here. We are stuck right inside of the high volume node right in the middle there. We have in this current contract, the 78.2478 is the most recent high, and that's likely what we're shooting for next. To take a look at what we've accomplished for the week, it's really important to see what the market has done, right? So we're always answering those questions. What has it done? What is it trying to do? How good of a job is it doing and getting there? And what we see in this week's performance is, again, the market attempts lower and rejects lower prices and builds consensus higher. And so we are back and attracted to the thicker profiles that we've put in over the last few weeks. You can see most of the fat part of the profile is up higher where we are, and we're holding steady in these areas. So the market's not able to sustain any selling below, and it's definitely not able to sustain holding prices above either. So we're kind of in between and continue to be so. As far as what we're expecting for today, before I get into that, I want to remind you that it is Like Friday. I would appreciate you hitting the like button today. If you don't see, if you're watching this through through an embedded video or something, look for the YouTube link somewhere on the video, click on it. It takes you to the YouTube live stream, and then hit the thumbs up button, please, before you head out. I'd appreciate that. So extending the prior balance forward, we see that all we've done yesterday is just make the fat part even fatter. And our point of control remains at 63.50. This morning we're trading on the low side. Let's take a look at our overnight. Here we go. The overnight session made an attempt to push towards the high, could not succeed. The overnight session has had a very clear channel down and is unable to breach the mid. We're at the point of control right now, but the overnight session was pretty much selling on the on prices. We have an overnight inventory that is short coming in, and of course the delta is not telling us much because rollover started yesterday, and the delta is not likely to represent the actual pricing. And the reason is that you have a lot of positions rolling from one contract to the next, and so that brings in volume that doesn't represent actual demand or the actual auction it represents. calendar spreads rotating from one product to the next. You have to be careful reading that. But overall, the overnight inventory is short, so I'm expecting on the open, given that we are in balance, I'm expecting for us to come in, open up, immediately move towards the prior day's point of control and into the 63.50, push through, consolidate, and then likely to sell off into the close today, into the weekend today. That is hypo 1. So I'm looking for responsive buying into the point of control, yesterday's point of control at the 61.50, and then a push through to 63.50, the MC point of control, and then consolidation in there before it starts to fail over. Yesterday, buyers just could not come in. Every time they pushed higher, it continued lower. This morning, I'm expecting that to rebalance and then to sell off into the afternoon. If we do get an open that fails to get into the MC, the prior point of control, and then breaks the opening swing low, then we're looking for 53.25 as the initial test. It puts us back into some pretty good support that puts us underneath the low volume node here. So I'm expecting a pullback to the low volume node at 56.50, 57, and then I'm looking for it to consolidate down here before pushing higher into the close to rebalance. So that's hypo 2. Okay. Those are the two key plans for the day. I want to remind you to make sure you at least come in with some sort of a plan every day before you commit your money. Come in with a plan and then wait for the market to show you what it wants, what its intent is, and that helps you align yourself with the market. Even if you're wrong, you wouldn't be wrong by as much in my experience, rather than someone who's coming in and just trading on impulse, no idea when they're right, wrong, or what the trend is or what the context is. That's the point of this Trader Bite, and this is hopefully something that's helping you along. Again, hit the like button before you leave. I appreciate you listening in. Take care.